Hello and welcome. Hello, everyone. Sorry for my background. I enjoy restoring classic ski boats. Embarrassed to admit how many I have, but it's kicking the pants for me. I enjoy it, and it's one that I'm thinking about buying. I haven't bought yet. Anyway, they're all Crack Craft or ski nautiques is what I enjoy playing with. Anyway. We have a lake pretty close to us. And Jenkinson. So there's a lake called Jenkinson Lake near me. And it's a cute little lake, very family friendly, and you can water ski, wakeboard. And there's no jet skis, which is nice. So it's super family friendly and it's quiet, which is nice. And especially with the family, you don't have to deal with drunk people and all that kind of stuff. You really don't get that there. So it's a nice little cute, quaint lake. Um, Big enough for fishing and skiing and doing all the things. And it's about 15 minutes up the road for me. So my garage, when I bought my place, it's a 28 by 35 garage, and I'm like, why is my garage so big? And it really wasn't um, a workshop. It was just a giant two bay garage, and I'm like, oh, it's a boat garage. Anyway, so there, needless to say, well, now I need a boat. So now anyway, I got several now. Um, anyway, moving on. Welcome everyone to the Trading Coaches Playbook. And, for today's session, I was kind of just brainstorming what to talk about and to show you something new and different. If the group's okay, I started as a proprietary firm capital trader, a licensed 20 to 1 leveraged equity trader. Okay. And I was on a prop floor, and then I had the opportunity to have my own prop floor. Hence, I moved to Scottsdale, Arizona, and I had 25 traders underneath me. And it was a by and large dominantly day trading floor. And what I can share with you today, what might be fun for some of you, is to talk a little bit about active trading. Now, those that know me know I'm more of an options trader, know I'm a swing trader. But do I have elements that I've brought from the day trading environment? The answer is yes. And so maybe we could do a little focus on things that I look at or things that I've come to over the years that have given me tips and tricks for timing intraday. So what do you think about that, group? Is that something that you would like me to dive into today? What do you think? Does that sound fun? Okay. And, so we're going to talk about, I can list some of these things. So we're going to talk about multiple time frame analysis, and I got stories for days. So if you want to jot down these three things that we want to touch on today, we can talk about multiple time frame analysis, and specifically with moving averages and or an indicator. We can talk about ATR stretch. Okay. Now there is something about, there was a trick that you can still do it to this day, but believe it or not, some of the intraday timing techniques that I'll share kind of circumvent it, because we used to look at the New York Open Book and comparison contrast it to NASDAQ level 2 data. Okay. And some of you may not know what I'm talking about. Well, you can subscribe to the New York Open Book, and that is all the orders that are routed to the New York Stock Exchange and the limit orders that are being routed. Okay, you don't get to see the not held orders, which are like, a basket like market order, like a mutual fund saying, hey, I'm, Dodge and Cox Mutual Fund, Mr. Market Maker, I want you to buy me, I don't know, shares of Apple, and I want you to try to get me, 80 million shares underneath 172. And then over the next 3 days or so, that market maker is going to try to scoop up shares quietly. And we'd look for discrepancies between the New York Open Book and the NASDAQ Level 2 data. Okay, so that I'm not getting into today. Now, was that kind of how do we say, was that kind of one of our little, not necessarily secrets, but that was one of our niches and we'd look for discrepancies between the NASDAQ level 2 data and the New York Open book, and then we'd capitalize on it. Anyway, so some of that, it still exists out there, but we don't, to this day and age, you still can do it, but you have to pay for the New York Open book, and I think it's pretty expensive now. It used to be like $60 a month back in the day. Now I think it's like 300 a month or something. Anyway, I think it's pretty expensive now. In any case, we're not going there, but we will talk about ATR stretch as an intraday timing technique. We will also talk about multiple time frame analysis, and we'll talk about moving averages, and then we might draw in like an indicator, and we can pull in RSI or maybe stochastic. And it's not so much the indicator itself. You're kind of waiting till the stars align. You're kind of waiting till multiple things line up all at once. Okay, so those are the things we're going to touch on today. And these are tips and tricks that I've come to assist you, or some of the best things I've come across to help you with intraday timing, okay, in my travels. And these are things that also come from the trading floor, and I'll share some stories along the way. All right, so before we get to it, just a reminder that we're an education company. And I always like to say we could show you the coolest stuff. It doesn't matter anyway if you don't have proper money management or risk management. And if we get into any setups or trades, they're for demonstration and education purposes. Okay. All right, so let's back out of this. And we're on a paper account right now. It's a simulator, but the techniques that I'm going to share are, it kind of doesn't matter. And I didn't have anything pre-planned, which is probably good for you. Or another way to say it, I didn't have anything pre-built. So during this process, you can see me build some of these tools that we can take a look at. Okay. And so let's hop to it. Okay. So first and foremost, some of you already know that jump into my weekly sessions with me. Some of you know about ATR. Okay. And what is the trick? Well, a trick might be to combine ATR with a level. Now, when we say level, we're talking about a price pivot, like here. And the concept being is that I'm a visual person. I actually what's weird, I'm an auditory learner, okay, but I think of pictures in my head. They call it a creative brain. I'm artistic. I can paint, I can draw, I can airbrush, I can do all those things. I can see a finished product before it's ever finished. Okay. And those that understand me, there are two types, people, there are people that can't think in pictures. There are people that do. Okay. And the easiest way to think about that, can you do math in your head? If you can't do math in your head, then you're not a, think in pictures type person. And so anyway, I visualized the first year I was trading for about a year, and a rubber band popped in my head. And this was on the trading floor, active trading floor, because stocks can only move so much before they get maxed out. Okay, before they get like max capacity. And another way to think about it, stocks can only stretch so much before they have other problems. So let's just grab one of these real quick. So here is MPC. Okay, this thing is down $3.70 right now. Well, this is delayed, but this thing's down 370 right now. Max ATR is $3.81. Okay. Now, is this just one of the tools that I've come to over the years as a trading assistant, even intraday? Okay. And again, what would happen if this thing dropped down $6 today? If this drops $6 today, all of a sudden the retail public is catching on, and then you have a max exodus of retail public trying to panic and sell. Okay. So one way to think about it is that, things can only move so much. I don't know if you want to call it a rubber band. We're not breaking the rubber band. We're stretching the rubber band and then letting go. You can call it a tether. You can call it a leash, if that makes any sense. And so this particular stock is down $3.65. Now, the question begs, could you have used this little technique intraday? Okay. And so here's where we open roughly, and this thing just tanked, right? And it was down an additional like 20 cents, maybe 40 cents, something like that. So it got to its full ATR stretch, pretty dang close to it, and also respecting some sort of pivot. Okay, so could you combine? So if you're taking notes, and I can type in the chat if you'd like, combine ATR with pivot, right? Pivot point. Now, this isn't like a buy and hold type situation where if you see a stock experience its max ATR stretch and it's at some sort of level, you're like, ooh, and could you have used this little concept to actually day trade today, this particular stock? You know, because what was the bounce, you know, at its low? Not to say that you'd pick the absolute low. I mean, you might have jumped in at 150.20, taken some heat on it before it finally started to move back in your favor. But what's the, let's say you got a 150.30 entry. It peaked at 151.61. Would this have been, and this was in a 30-minute time period, would this have been a phenomenal day trade? Okay, so if you want some of the isms, so not only have I been a day trader, but I've also ran day trading floors. Okay, and usually the talk track to students is that you look for at least 20 cents per share, okay, per day. Okay, most day traders worked up to, you know, 500, 1,000, maybe 2,000 shares that they would day trade with. Okay, and if you're making 20 cents on 2,000 shares, that's a $200 day for you. All of a sudden, we're starting to talk about a salary, if that makes sense for some of you. Okay, maybe it's not the best salary. Okay, well then 2,000 shares. So then that's a $400 day on just a 20-cent move. Okay, so hopefully some of you are catching on. I'm going to shut up for a second. Any quick questions? I'm going at a pretty good pace here. Quick questions before I keep cruising here. Does that 20 cents make sense? Because I'm trying to point out that, you know, you catching a dollar move here is a phenomenal day trade. We good? You know, because what if you set up a risk? You know, what if you got in at 150.20, you put a stop at 150.90, and then your target could be, what if you make it a 1-to-1? So maybe you're risking 20, 30 cents to make 20, 30 cents. And, you know, you probably would have hit that target today. Okay. So again, is day trading less of a emphasis on trend? A little bit, right? And so ATR stretch is just one of the tools that I came to that is fairly effective. Let's look at another one of these to see what these look like. ConocoPhillips is another kind of case in point. So if I drag this down, right, ConocoPhillips, and I think ConocoPhillips might still be an uptrending stock, but ConocoPhillips's ATR stretch is 263. And right now it's down 218, but wait, there's more, right? So if I drag this back up here, at one point it was down an additional 30 cents, dun, 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 which shoves it pretty dang close to the 263, right? So this was down an additional 30, 35 cents, which gets it pretty dang close to that 263. And for a day trade, you know, what was the move? You know, this thing snapped back in like 15, 20 minutes from 120.13 up to 121.45. Okay. So, you know, again, that's about $1. So again, if you can scrape 20 cents out of the market per day times a couple thousand shares, all of a sudden we're talking about a living for people. Okay. Now, does the 20 cents have to be from one ticker? It's not 100 shares, Jennifer. So day traders normally work up to 1,000, 2,000, maybe 5,000 shares. We had a couple guys that would swing 10,000 shares at a time, and I got some stories. But normally you cannot afford to pay your bills off 100 shares in day trading. Normally you got to work up to about 1,000 to 2,000 shares. Because again, if you're trying to make, 20 cents per share, yeah, 100 shares is not going to pay the bills. I got you on your math, but yeah, no, 100 shares isn't going to, make you allowed to pay your bills. Now, I I would start my traders off. So I mentioned I ran a trading floor. I had, I think, 10 experienced people that were already old school day traders that were on the floor. And then I brought in another half dozen on my floor. And I'd take these people from nothing and build them up. And I would usually start them out, Jennifer, trading 200 shares at a clip. Okay. I wouldn't even let them trade 100 shares because commissions, normally eat up your life. Okay. So, get consistent, at least trading 200 shares and then slowly work up as your position sizing. Okay. There was something else I was going to share. Yeah. No. If you're day trading, you probably need to be swinging, 1,000 to 2,000 shares to make it, viable, if that makes sense. Okay. So ConocoPhillips is another example. Now, again, day trading means you're in, you make a little bit of money, and you get out. Okay, so yes, this thing rolled back down again, but you may not care because you've already jumped in this thing. You went long somewhere down here. You caught, whatever amount, if a minimum of 20 cents and you're out of the thing, right? So again, if ConocoPhillips were down $5 right now, and it normally only moves 263 per day, could that cause some mass selling? And then banks and institutions have other problems on their hands. Okay. One thing that's been respecting it quite a bit is the S&P. So S&P, the S&P is something that really tends to respect ATR stretch, especially lately, with our choppy markets. Okay. Brenda's asking, break that down into how many contracts for trading options. Okay, Brenda. So this is just a bigger picture active trading or day trading talk track today. As far as day trading options, that's a whole other conversation. Now, in my sessions, Brenda, I do bring in ATR quite a bit, but can you actually use ATR as a day trading timing technique? It's not the end all be all, but can it be a trader assistant or what we call an odds enhancer? Can it be one of your odds enhancers to your trading? Okay. For day trading options, to me, that has to be depending on your yield and your ROI. Because I think what you're looking for is like, what it may be. Are you shooting for 2% of an account per week? So that's kind of where it's centered on that. Usually when I do my sessions and we do spread trading, I'm usually looking for, 1% on the account per trade. And I might be in the trade for a couple days, 2 to 3 days, maybe 4 or 5 days or a week. If we're forced to a couple weeks, but that's usually, where we're at. Now the question begs, Brenda, does that 1% of your account offer you enough of a living to survive? And how big is your account, Brenda? So that's a trickier question. I can share what I usually shoot for when we're looking for premiums, because usually we're looking for 1% on the net spread premium. And if it's 1% in relation to share price in a margin account, we're probably getting closer to like 2%, but then we're getting out at a 50% crush in our premium. So there's some layers here, Brenda, but by and large, it's probably centered around 1%. So if we're getting out at a 50% crush in premium, we're probably making 1% on the transaction in relation to share price. You know what I mean? And does that 1% on that one trade, how many trades in a week would you need on the account size that you have to pay your bills or meet your goals? Not necessarily pay your bills, but like have the goals that you're trying to meet. Okay, so hopefully that makes sense. And let's keep going. Any quick questions about ATR? Now, we also use it on the upside. I'm trying to think. There were a couple stocks that could you use a similar technique for the upside? And you absolutely can. So what about Baidu? Okay. Baidu, its max ATR is what? $3.44. Okay. And so if we look at maybe let me see, just see on a daily chart. Okay. And we zoom in and see where it opened. So it opened here. Okay. And it was at 135.88. And this thing ripped to what? It ripped up a buck. Okay. I'm not sure. Oh, it gapped up. I apologize. Okay, so it closed. I'm sorry. So it closed here, right? And it opened here at 135. So this thing shot up close to $3, and then it ran an additional 60 cents. So it was pretty stretched out. And what's also key to note, did it shoot up to a level? So if you were trading this thing and you saw that it gapped up and then it opened here, and more than likely it probably opened and ran up here, and you're seeing that it's coming into this topping wick, could you have put on a short? And the question begs, could you have shorted it and made your at least 20 cents? So if we come in here to maybe a 15-minute chart and we see how much this thing dropped, once it experienced pretty close to an ATR stretch, it at its peak was 136. Not to say that you'd shorted at the peak. What if you're a little sloppy? What if you shorted it at 136.21? You still ended up getting, what's the math? 136.21 to 134. Oh my gosh, at least a buck. Again, 20 cents a day is a nice thing to shoot for. Now, obviously, making more than 20 cents a share per day is better. Okay. But your kind of minimum goal usually as a day trader is to try to scrape out 20 cents is kind of a good goal. Okay. Back in the day, like if I talk about like after the .com stuff or during the .com, I was just getting on the scene when the .com had kind of ended. And there were traders that I knew that, were used to getting $1 a day trading. But then that kind of went away and they kept trying to look for $1 and then, had a hard time. So $1 is too optimistic in my opinion, but trying to scrape 20 cents a share per day is usually a nice target as a day trader. And it doesn't have to be in one transaction. Could you do 4 day trades in the same day, scraping out, maybe 7 cents a clip, minus commissions, and you're still netting like that 20 cents a share. Okay. Cool. So could you have used this to day trade? Absolutely. Could you have shorted this thing once it's kind of at an ATR stretch if it's kind of at a level? And if I backtrack and we look at a chart here, we can zoom in a little bit and see that this thing gapped up and ran just a tiny bit, but could you have used this to short to actually, do a shorter term intraday day trading? Okay. Cool. So back to my original point where it's not just ATR, but combining ATR with a pivot is kind of, another addition to another little odds enhancer. Let me see here. Here's my watch list. See if we can see any others here. Lululemon. Okay, so the question begs, was Lululemon up $8 today? It's up 5 right now. The question begs, was it close to $8 today? And it appears that it might have been. Okay, so here's its peak, 189. Oh my gosh. So was it up at a max ATR stretch? So it's closer to almost 9. So currently it's up 5. So it was up $4 today, in addition to 5. So you mean to tell me this thing got to its max ATR stretch and then settled down a bit? Absolutely. Not that you'd want to short Lululemon, but did this thing rip? And could you have shorted into it? Now, question begs, did it have an ATR stretch to the upside and enter a level? All right, well, let's take a peek. Can we see it on the daily? So here's where we were, and it absolutely did. So we can draw this. Here's where we are. Let's get rid of this. Okay, so here's where we are. And did this thing have a max ATR stretch and shove itself into a pivot? Did price run up, stop, and roll down again? So price gapped up, rallied up, max ATR stretch, and then it kind of settled off. And could you have shorted into that? Again, this isn't like, long-term hold stuff. This is like, intraday timing type stuff. Okay. So talk to me, group. Is this do you like this concept? Do you not like this concept? What do you think? Brenda likes it. How about the rest of you? So this is one of the tools that we can add to our arsenal for intraday timing techniques. Now, what if you're an options trader? What if you're an options trader? You're like, Sean, I'm really not into day trading. Could you use a similar technique to try to maximize your premium? So what if you're not day trading the option that you're putting on, but could you use this technique to, trade options? And so what if you're going to hold the option for 2 weeks? You still can, you know, kind of maximize, optimum entry as using this technique. Okay. So any quick questions about ATR? And like I say, I discovered this a year in. So this was like, 2001, 2002, something like that. When I found it, and then it became, one of my tools in my toolkit. Okay. Okay, so let's move on. I want to talk about intraday timing, specifically multiple time frame analysis. Okay. So one of my mentors back in the day was a very patient man. The guy would usually do 2-day trades a week. So patient. But usually he was swinging, 20 to 40,000 shares. Again, I'm going to repeat myself. The man usually did 2-day trades a week. He came into the office every day, so patient. And most of the time he's just sitting there waiting and waiting. And his jam was, $4 to $10 stocks, so cheaper stocks, but then swinging 30 to 40,000 shares at a clip. And the man usually was looking for 10 cents. Is what he was looking for. And that was his jam. And he was good at it. Now, one thing that I took from him, I mean, that's not the only thing I took from him. I should back up. I took several things from him. Okay. One thing that helped me when I was first getting going is multiple time frame analysis. Okay. The man, had at least 4 monitors. And his monitors weren't dedicated, like one to the internet, one to like his position, one to a chart. No, it wasn't set up that way. Each independent monitor was set up with a different time frame. Okay, so that I'm not done yet. Okay, so that was like the first kind of, oh. And when I first started, I kept getting run over, specifically as a day trader, and I kept fighting the overall trend. Okay, it was one of my issues. And so what helped me was look at the bigger picture. That's one of the biggest things that it gave me, is that we fail to look at the big picture. And those that jump in my weekly sessions know that I lean on the weekly and then do entry more so on the daily for like our swing trades or our spread trades. And that's not by accident. Okay, so the technique I want to share with you, we can do it a couple different ways. We can look at two different moving averages. Then we can actually use a similar technique, but then look at maybe an indicator. And I can show you some tweaks that we can do. Maybe maybe use a slow stochastic. That's one that I've enjoyed over the years. I don't use a whole lot of intraday timing tools other than ATR at this juncture, but the stochastics have helped me time like the futures market. And I still kind of occasionally go over there and take a look, especially when I'm trying to time something like crude oil futures. Like I don't trade crude oil futures a lot, maybe once a month, maybe once every other month. But when I do, I kind of go back to some of my old tools and some of the techniques I'm going to share. Okay. So those that know me know that I'm a big moving average guy. And so what if you're a day trader, okay, and you wanted to intraday time Lululemon, okay? Now, let's just hold the phone for a second on the ATR stretch. I think all of you got that concept, okay? So now let's flip the script. Okay, so let's add in a new tool. Okay, so think of this as an independent tool of ATR. Okay, for the moment. So what if we weren't trying to short Lululemon? What if we wanted to go long? Okay, so here is Lululemon. We're looking at a daily chart, and maybe it might be fun if I build out a secondary chart. So let's do this. And so this is why the gentleman had multiple time frames on his chart. And I'm guilty of it too. You know, my workstation here, I have a double stack. So I have 4 monitors, what I'm working with on right now. And they're 2 and 2. So there's 2 below, 2 on top. And I think these are 24s is what these are, I think, if I measure them. Anyway. But let's do that. So because I'm only sharing one screen, I will see if I can pull up. I need another chart. Detach. Okay, here we are. Okay, so can everyone see my 2 charts? Can you type in the chat? Okay, cool. And so what we're doing is taking a technique, but then waiting till multiple time frame analysis match and mirror the same thing. Okay. Now we can dive deeper on this. We can get geekier, nerdier on it. You can dig on this. You'll probably be pleasantly surprised. Okay. If we were to talk about some famous hedge fund managers and money managers, believe it or not, implement a multiple time frame technique. Okay. And so you're starting to get in line with what institutions are doing. Hint, hint. Okay. By using multiple time frame analysis and waiting till multiple time frames concur. That's how this works. And again, this is actually an intraday timing technique that you can implement. And again, this is one of the tools that I found more effective over the years for timing intraday. And so here's Lululemon. Here is a daily chart. And we can see that it's already a candle above a moving average. Okay. Now, could we use that same technique on a smaller time frame? What if we were to drop down to a 15-minute chart? Okay, and to me, this still looks a little choppy. What if we're looking at a 30-minute? Still a little choppy. What about a 5-minute chart? Oh my goodness. Okay, so if I were to zoom in here, and we can see when this is where it kind of opened, it rallied. Okay. Then we had a closed candle below. Okay. So the way this works is you're pretending as if you missed it. So you're looking at Lululemon, right? And you just pulled up Lululemon and the chart looks like this. Okay. And you're like, Lululemon is above moving average on the daily. It's above the moving average on the 5-minute. You're like, crud, I missed it. I missed it. I missed it. I missed it. Okay, again, this is a shorter time frame intraday timing technique. So what's the signal? Okay, so if we drag this over, you wait, you're patiently waiting, patiently waiting, patiently waiting. Ah, I have a closed candle below my moving average. Okay, so now I need to get ready. And now I'm patiently waiting till I get a what? I patiently wait till I get a closed candle above a moving average. Technically, this would be the signal. This would be the signal maybe to put on your risk management. So if you went long, could you go long debit calls? Could you go long calls? Could you buy shares? Could you do a put credit spread? Oops, I'm on the wrong ticker. Sorry, group. How did that happen? Thank you. Okay, so the technique is still the same. Let me zoom in here. I apologize. Loose nut behind the wheel. Okay, so we can see that it's above moving average here. So the signal works is you wait till you get a closed candle above. Now, Lululemon is an expensive stock, right? But the question begs, you probably wouldn't want to day trade this thing because it's very labor, intensive. But if you would have waited for a closed candle below, and what if you waited till like the 5th hour at the close of the 5-minute? What if you went long at 384.73? Okay, and what sort of upside did we have? 384.73 to 385.13. So that's like 35 cents. Okay, now granted, 1,000 shares, you can think how expensive an account would be to make money on the 30 cents or 40 cents. Okay, so then it sucked back below. Okay, we got a closed candle above that might have given you a signal. You might have been stopped out, but we got a closed candle here, right? Maybe you waited for the confirmation, right? So then here is your, smelling like a rose. And could you still be in this trade? As long as it respects the 5-minute chart, could you still be in this trade? This is a 9-period EMA, Brenda. Let's look at another stock. Give me a ticker that you like to look at. And maybe I should link these so I can't mess up again. The Qs, we can look at the Qs. Qs can be more mechanical. That's fine. Okay, so same, but different. So here's the Qs, and maybe the Qs is above a moving average. So maybe you want to go long. Could we look at the 5-minute? Okay, so here, maybe you missed it, right? Maybe you got in here, 360.33 to 360.61. There's 30 cents. Okay, then it's sucked back below, closed candle above, 360.44 to 360.70, another 30 cents. Cross back above. Okay, what if you went long? What if you got a late entry on it? 360.62 to 360.88. There's 28 cents. Okay, so the concept is you wait till they both agree. Okay. You want me to look at Apple? Now, the gentleman that I mentored under, right, when I was a wee little lad, okay, I mentored under him, and he would wait till 4 different time frames agreed. So we're waiting till 2 time frames agreed. The man was so patient. He would wait till 4 different time frames all told him to go long, or all 4 different time frames told him to go short. Okay. And he used not quite a moving average line. He used a derivative of a moving average. He used MACD histograms and waited till they all agree. But the technique is similar if you're just using a single moving average. In fact, I think it's a little easier to see if you use a single moving average on different time frames. Okay. And MACD histogram, it's okay. For a similar technique, I came to liking stochastics better. Okay, and I'm going to show you some settings in just a moment on how to tweak stochastics and to force you to be more patient. Okay, so here is Apple. Here's a daily, and what if we just pick maybe a 15-minute? Let's try a 15-minute on Apple. And the key is you wait till they both agree, is how this works. And I know a lot of you are anti, shorting Apple. There's a lot of bullish Apple people, but let's just forget that for a second. Okay, this puppy crossed below the moving average, 2 weeks ago here. So your sentiment is bearish. And what if you were a day trader and you wanted to find a day trading entry to short Apple? So Apple did this kind of weird open, but then it crossed below the moving average. Okay. And the question begs, how much fruit did it bear? So it dropped from 171. Its first little blip was 171.6. Wait, what was that again? 171.82. This is 171.60. It did go even lower before it recovered. It dropped to 171.33. So there's 50 cents per share capitalization here, which would be a nice day for a day trader, especially if you're swinging a couple thousand shares. It's a nice day for some of you. Okay. And again, the key is find the big picture and then wait till the small picture agrees and then participate. Talk to me, group. This is another little intraday timing technique, or one of the couple of the better ones that I came across over the years. Is that the only EMA I use? Yeah, I've evolved, but again, 9 EMA is by and large what I use on weekly charts for spread trading, right? Hang on a second, my phone is blowing up. Okay, we're good to go. Okay. So it's a 9. This is I don't know if it's I think it is a default 9 EMA, and my personal preference is use it on weekly charts to pick my buys. Right now, for intraday timing techniques, could you use you could use a weekly, but I'd probably lean more on the daily for your big picture to give you the bias, and then use a smaller time frame for your intraday timing. You know what I mean? And the key is to wait till they both agree. And if you dig into institutional traders, if you dig into hedge funds, if you dig into, how, some of these people trade, you're getting closer and closer to how they behave, right? Using multiple time frame analysis. Could you use this for calls and puts? Absolutely. Could you have purchased a put on Apple once it crossed below the moving average? You could have. But just remember, it's got a weaker delta. You know what I mean? Because if it's an option, but could you? Sure. Maybe if you don't have enough money in the account to short Apple, could you just buy puts on it to do, kind of some day trading on some options? You could. Now, I'm going to add another layer in here. Okay, so for simplicity, let's get rid of this. And I'm going to put in a stochastic. And hang on, bear with me. It'll take, and I didn't build this out on purpose. You're going to see me clunk through it, which is good because I'm gonna tweak some of the settings a little bit. So we're going to add studies, all studies, and don't use don't use fast stochastic. It's just too choppy. So we want to find stochastic slow. If you see it before I do, there it is. I see it. Stochastic slow. And then I'm going to throw it over here. And even this to me is too choppy. So we're going to fart with it a little bit. We're going to add it over here. And like I say, one of my mentors, this is what the man did. He did very well for himself. He used MACD histograms and did usually 4 different time frames and waited till they all agree. And this is just another way to play it. Now, we can tweak the settings here and we can make these more dramatic. And when I started implementing this, I got tired of being faked out. And so I wanted less moves, not more moves. And so one of the ways to do that is to tweak the settings. And so we're changing our ceiling and our trough to 90-10. Hang on. 90-10. And could we tweak with the K and the slow? Let me see if I remember this right. D and the D slow. I think the K, I might have this backwards. The K is the space between the opening and closing, and the D is the average of the space. Maybe I have that backwards. You can Google it, but you have one is actually the indicator, and then the other is the average of that indicator. If that makes sense. So basically you're waiting till one crosses the other. And can you widen these up to smooth them a little bit? Yeah, for giggles, could we try to smooth it? I think if we go, let's just try 15 and 15. And then we're going to hit apply and okay. Notice it smoothed it out quite a bit. Can everybody see this? Okay, and could we do the same thing over here? Let's keep it on a 15-minute. And again, we're changing the studies, and by stretching these out to be overbought, oversold, we're looking for the extremes before we mess with it. Going the wrong way. And then what if we just try slowing it down a little bit so it's less choppy? Here we are. And maybe we slowed it too much. There we go. But you may like this. Okay. So what's the technique? So again, here's the daily chart. This is the 15-minute. We got an oversold here. Okay. Then it crossed below. So could you wait for its oversoldness and then wait for it to cross below? Okay. So I think we can change the time frame. This is back in September. I need to probably make the crosshair align. Is it up here? When did it drop? 9:20. Uh, 9:29. We need more data, right? So we gotta go further back. Oh, there we go. Okay, so when it got peaked out, it was not 9:20, excuse me, it was 9:06. I apologize. So let's go back. I'll get there in a second. Okay, here. Dun dun dun, we found it. Okay, so the way it works is you want to wait till it's not labeled when here, I'll do this. Okay, so 9:06 is here. Okay, you kind of wait till they both agree. Okay, so you would have missed some of the action What if we can put a line here so then we can mark it kind of here, right? And now we can zoom in, and then here's our line. So you kind of wait. Wait, no, is that right? Is that the line I drew? Pretty sure. Maybe not. Okay, here. Yeah, that. I'll get there in a second. Oh my gosh. Okay, so here we are. Okay, so when did it cross below? So it crossed below here, and how much did it drop? Now, this is a 15-minute chart, which is kind of fun, but it went from 182 to 177. Oh my goodness. That's like a $5 move. Can you imagine 1,000 shares and $5? Is that a nice payday for some of you? Absolutely. Okay, so I can dive in this deeper, but this is the gross concept. So again, we saw this thing cross. It went into the oversold territory on the daily chart. Then it snapped below on 9.6 or 9.7. And then you're patiently waiting till this thing gets overbought as well and then starts to roll over. And that would be more of an entry to short it. And notice it's below the moving average. Dun dun dun. But this is the concept group. Okay, so it's for me, like, we're diving into something a little new here. You probably haven't seen me talk a whole lot about this, but this is another intraday timing technique that I found effective over the years. So let's scoot back. Let's see if we can find something that's more current. If that makes sense. Okay, so let's do this. I want to try one more thing. It's been a while since I've tweaked this. Let me just try we can try shortening it. Let's go to 7 and 7, lucky number 7. And then apply. It's going to get more choppy, but let's see if that may apply. So let's look at a new ticker. Let's look at crowd favorite. Let's look at Tesla. All right. Good old Tesla. And did Tesla show us an indication not too long ago, 9:15? Okay. And could we go back to 9:15 as well? Oh my gosh, I lost it again. Okay, here we are. Where is it? I have to put another marker. Okay, so 9:15 is here. We got an indication. What is that? 3 hours after the market open. So we're going to put a placeholder here. And maybe we could label this like, patient day trading. The way I've always thought about it is wait till the stars align. Okay. Brenda's pointing out she has settings of 80, 20, 8, and 3. I got you. If that's what you already use, Brenda, what you may, if you want a little tweak to that, wait for 90, 10. Because then it's going to get rid of some of the chop and make you more patient, and they're probably going to be more substantial. That's where I've come to, is I want fewer trades, but then I want good ones. Anyway, food for thought. So now we got our placeholder. Let's scoot back to where we were, right? So again, we saw an indication where it became overbought and then it rolled back down again on like 9:15. And let's go find our placeholder. Okay. And let's zoom in. Is that? I think that's what we zoomed in on, right? Maybe not. It was here. Aha, we found you. Okay, so you're waiting till they both agree and then they roll over. Okay, this one gave you an indication, looks like, but then it kind of went sideways. But then the second time it revisited it, then it finally, rolled over and was a wonderful trade. 278 to 271, like a $7 down move on Tesla. We can also talk about divergence as another technique, but we have this peak and a lower peak, which means it couldn't get as high as it did before, and then it finally rolls over. Now, this is with us changing it to a tighter interval. What if we see if it looks better if we go to the back to the 15 on each? Let's see if it smooths it out a little bit so we don't get a fake out. Let's try it. It got more extreme. Looks a little more here. What about another implementation? What about another implementation of going back to the technique in its true form? Okay, and if we back up, and how is the tool meant to be used, or those that have used it, ways that you found it more effective? Okay, so let's dive into that real quick. And I'm going over time. I kind of have a hard stop at 10 o'clock, but I'll make this quick. So I'll start talking faster. Could you wait till it's oversold and then crossing below its purple line? Wait for that. Then wait for it to get oversold, then cross below its purple line. Then that assists you with timing. Okay. So again, multiple time frame analysis, wait till 2 time frames agree, look at the big picture first, wait till the small time frame concurs. And if we're talking about stochastic, wait till it's oversold, then crossing below, and that would have avoided the entry here and would have got us in here when it actually was starting to roll over. Okay. Cool. I don't mean to be abrupt and be rude, but I got a hard stop, group. Anything else you have for me? Did you enjoy today's session? Yes, no, maybe so. ATR and multiple time frame analysis using moving averages or an indicator. And you can geek out on this and you guys can, report back to me what you've uncovered. But these are two big concepts that really assisted me when I was day trading. Okay, cool. Well, cheers, everybody. Happy trading, and we'll go from there. Take care, everyone. Bye-bye now.